Hello everybody, Houston here. I hope you guys are doing well, having a great day or a great night. And before jumping into the charts, don't forget to smash the like button, share with your friends, and subscribe as well. Your support is very important to me. And let's do it. So before jumping into the current price, let's take a quick look back in the past because I want to explain to you why my perspective changed for the short time frame and why I believe the bulls are in control. So let's do it. So the first thing, we are going to take a look on the early days. Let's take a measure here as well. Second. So first one, 85. That's 85%. Yes. So the second one, which was a bit aggressive, but not a big deal. 80-90%. 89. Yeah, and now let's take a look on the big one. So 96, 93. Oh, actually, it was way lower in the leading exchange, if I'm not wrong. But yeah, just for the sake of this example, let's use 96. Okay, so in my previous video, uh, or in one, maybe the first one, I don't remember now, sorry. We were talking about if this move right here was the bottom for XLM. Like this is it, we're not going down again. And so, another way to look at this is this. As you guys can see, the corrections are getting stronger. But the thing is, also the gains, okay? So it's not like a bad thing to see 97, 98, 99% retractions, sorry. It's accordingly to the gains, okay? Because as you guys can see here, even after 96 or 97, 90, 80% decline in price, the bulls is still in control. And there is also another key thing. The discount will never be higher than the gains. Okay, so for example, let's do a quick use a quick example here. Let's say you have a company and you made like 100,000% $100,000 in profits, right? And now you're going to make a campaign. And you are going to give a promotion or something like this. So your discount can't be higher than, lower than 100,000. Otherwise, your profits are gone, right? So for a 97% retrace, let's say we are talking about $97,000. You guys can see we still have like 3% or $3,000 in profits behind. So this is one of the reasons that I explained before, and we can still use the same example to understand why we are in a bull market and why this haven't break bearish below the previous gains. Okay, so for example, if XLM had a bear break all the way down to the previous range, it would be bearish. It would be like a straight bear market. but that's not the case. And why we know it? Because this kind of retrace between 80, 95, and 97, 98, and 99% are still healthy for the long run. Okay, so sorry, in the bigger picture, in all the scenario, the bulls is still in control. Okay, uh, we also talked about back in the day about this dip right here, and I said that it was very, very unlikely for prices to even go close to this level again. Okay, and so now, folks, let's take a look in the other chart. So let's take also a look for the OBV. What is this? Okay, so as you guys can see, just a moment. Yes, so since 2018 January, this is for Binance. Okay, price going down, buyers volume going up. So this is clear accumulation. Okay, perhaps not for the not on the early days for the smart money, but all the way down we know that key people still buying non-stop. Okay, so this is nothing new. We also talked about this. And here, folks, this move right here, it's a bullish divergence against the previous high, believe it or not. This is crystal clear, right? Yeah. So the thing is, back in my one of my previous analysis, I said that I was expecting. Oh, so the title for the last was XLM triple top, which actually was a triple top, and we had a pullback after this triple top. So I said that I was waiting for a retrace around this range right here, okay, because it could give us odds for inverted head and shoulders. So this would be a more clear scenario, okay? But back in the day, I didn't had this setup here that you guys can see, okay? And this is my perpetual setup for the charts I'm working on, okay? So this is like back in the day, a few months ago, I talked about a I was working something that was going to change the way technical analysis is made, and yes, we achieved. And yeah, so let's go. And as you guys can see, the retrace stopped here at this very key level, which is healthy, also healthy. And right after, we had this big spike. And before this big candle right here, we had one with a wick above all the other ones, which gave us a higher low. In other words, as well, a bull break. Okay, and this was a very strong and significant move. And what I want to point to your attention here is this. So this level right here was the domain of the bears, right? So no news. With this move above, it changed, okay, because now the bulls are going to defend this reclaimed level. This is the behavior of support and resistance traders, okay? That's how they are going to behave from now on. And this level right here, which is the 50%, the average for this range, it's exactly the previous resistance, the domain of the bears, okay? And what we may expect now, we are looking for bullish continuation. This is a weekly candle. It's all the way powerful. Okay, this is a power candle, and we just like I said, we are still above this level, which is very, very significant. Okay, we are not here just by you know, random events. No. Everything is accounted in the charts. And so with the first levels taken out after the bottom, we are looking out for the next ones, right? And the next ones are right here at 13 cents. And at 13 cents, yeah, just a little below, we have also another key level. And we can see here all the confluence we had in the past. So there's two ways for this to play out. Or they make a strong move above and then rest before continuation, or we just go for the resistance, we fall back a little before continuation. And doesn't matter how this one plays out, if we go back to the previous level and then keep going, doesn't matter. Okay, and so now for the bigger picture of things. Okay, I know there's a lot of people calling for moon, this is it, new highs. Again, folks, a straight move up. What are the chances for a straight new highs like this? We know it's a lot about a low probability scenario. And again, remember, every parabolic move will end up in a bad way. Okay, so it's better to have a more healthy approach instead of opium perspective. Okay, so what we may expect, so it doesn't matter, like I said, how we go up. It would be wise and smarter if we go for a lower high before the big one. Okay, that would give us more room to work and more momentum and time before the big one. Okay, that's the one we are looking for. And so it doesn't matter also how we play out here, or even like this. Okay, so it doesn't matter. This can be a much better scenario for everybody. Okay, otherwise, if the bulls spend a lot of money, firepower, and momentum to make a move like this, they can end up in a double top. And this is a parabolic move that can end up in a bad way. Okay, so yeah, I believe this is it for now. And watch out, okay, because this candle right here, even if we go for the 3 days, let's see. Yeah, so we are developing this bad candle here, as you guys can see. That's a bearish hammer trading inside the previous rejection. But the thing here is, folks, this can be the ultimate bear trap. Remember, we are trading above the key level that the bulls just reclaimed. Okay, so again, this can be a bear trap, and it is true that we can retest this level again. It's unlikely in my opinion, but yes, can happen. Or we go straight from here on the next candle. And just for you guys to have an idea, let me see if I can find here to show you something that we saw back in the day. Oh, right here. I was trading on this day and we saw this as a bear trap, this candle right here. That's a bearish hammer, all the way rejected, but the bulls made their point, breaking above this level. Can you guys see the rejection? And then they retested the previous level, and then we went all the way up. Okay, so this is probably a bear trap. Okay, the question is how much is going to retrace before bullish continuation. Okay, so watch out. Candles are reading candles is important, but it's not everything. Okay, yeah, so guys, for now this is it. I hope you guys enjoyed this video. I hope this can help you in any doubt, or maybe improving your the way you look at the charts or your trading setup. Yeah. So thanks for your time, thanks for your patience, thanks for your support as well. And I'm going to see you guys soon. See ya.